Welcome back, Aereheads. Welcome to the next installment in our Mastering Technical Analysis series. This video is so important that I had to go underground from air traffic command to bring you this video. We're talking about my personal trading strategy today. We're talking about smart money concepts. We're talking about trading price action, fair value gaps. We're talking about reading candles. We're talking about taking a look at charts without indicators and listening to the story that the candles are telling us. There are many price action traders out there who will tell you that the only indicator that is not lagging is the actual price. Indicators like RSI are just an imprint of what has happened in the past. And while they aren't wrong, they're not painting you 100% of the picture. These strategies we're going to talk about in this video are advanced level trading. You have to know this stuff eventually to become a master trader. So why not start learning now? These strategies can be used from anything from Tesla to gold to Bitcoin to cattle futures. And we are going to learn today about what exactly price action is. If you are just finding me now based on this video, make sure you hit that playlist in the description below. Start at video number 1. Because I'm going to tell you right now, if you don't have the proper discipline and the patience, because I'm telling you right now, trading is 99% waiting for the price action to come to you. I can't tell you how many discords I'm in right now watching people get stomped out because they are trying to long. What is telling you to long right now in this type of market structure? What possibly long signal are you seeing when we're doing nothing but dropping? All you're doing is trying to catch a falling knife and you're going to get stabbed. So if you don't have the discipline and the patience I talked about in the first video, you're going to have a bad time and you are going to fail and you are going to get burnt out, and your goal of becoming a trader is going to get washed right down the drain. This is probably the hardest concept for newbies to learn. Just looking at a blank chart and figuring out what the price of Bitcoin is going to do. So without further ado, ladies and gentlemen, let's just jump right into the video. Let's talk about lagging versus leading indicators. So lagging indicators are metrics used to measure the past performance of an asset. Leading indicators, on the flip side, are used as a predictive measure of future performance. Some metrics can be leading or lagging. Many day traders focus on price action trading strategies to quickly generate a profit over a short time frame. Traders using a price action trading strategy take positions according to their subjective and technical analysis. There are several tools and software platforms that can be used to trade price action. Price action describes the characteristics of a security's price movement. This movement is often analyzed with respect to price changes in the recent past. In simple terms, price action trading is a technique that allows a trader to read the market and make subjective trading decisions based on recent and actual price movements rather than relying solely on technical indicators. And lastly, since it ignores the fundamental analysis factors, right? Meaning, oftentimes you probably heard me say, I don't even know what this coin is, or someone calls out for me to TA a certain coin. At the end of the day, it doesn't matter because I'm focusing on more recent and past price movements. Price action trading strategy depends on technical analysis tools and price movements, not necessarily the fundamentals. If fair value gap is created between the wick, so this candle low, this candle high, and then the portion in the middle between those two is the fair value gap. Fair value gap, or FVG, they're a type of candle pattern that occurs when the price of an asset or currency moves so quickly that buyers and sellers don't have enough time to react. This creates an imbalance in the market, which can lead to the price returning to the untested price. So here we have a fair value gap. So we have the low here, right? You make your line to that candle, and then the high of this candle. So the fair value gap is in the middle of this candle. And you can see here, since we're in a downturn, the market had a huge upswing. It started a downturn. Now you want to try to find your entry, right? In this particular case, you say to yourself, there's the fair value gap. I'm going to take an entry in that gap. So what happened, right? It come down, and get that bounce back to the top side. it cleared that fair value gap. And then look what happens after that. You get the point. Now keep in mind, the market's in a downturn. I wasn't looking for longs. When we're in a downturn like that, you look for shorts. You don't look for longs. You don't try to time the bottom. That's not how trading works. However, just because you have a fair value gap doesn't mean you're going to it. There is no indicator out there that is 100% accurate. If you think so, you're going to have a very, very bad time. However, the more confluence you can find, for example, let's say you missed the original entry. This right here cleared this entire order block and this fair value gap. Same thing down here. You miss your entry. You want to find another entry down here. Well, you had a fair value gap and then this complete order block clear. And then we continue down. Keep in mind that while we're in this downturn, I'm looking for shorts. When we're in an upturn, I'm looking for longs. When we get a change of character, when the market changes structure, right? So when we take out the previous low, then I'm going to be looking for shorts again, right? When we get a change of character again, I'm looking for longs again. Same thing here. You can see there's no change of character this entire rip down. I'm continuously looking for shorts. You have change of character, which signifies a change in the way the market's headed, which you can see happened here. Break a structure just means that we are changing. So we made a lower low, but we're continuing in the same direction. Change of characters and break of structures are very powerful tools. Certain indicators like Lex Algo throw those and fair value gaps and order blocks on the chart in one indicator, which is great for price action traders. However, it's not the end all be all, and you should not automatically assume we're entering in a downtrend when you see a change of character or a break of structure. You need to find confluence. If you only take shorts based off of a change of character in an upswing, what's going to happen? So change of character happens, you enter into a short, the price goes up. You need to then find your entry, let the candles talk to you, find your fair value gaps, and play it that way. And at the end of the day, you take what the market is giving you, but you also take into consideration, we were in a shoulder, head and shoulders there as well, which played out and probably came up against previous, resistance. So let's jump back in time and watch how this played out, right? Where most people would have taken a short. Most of the uninitiated would have gone short here. Hit your replay button. Let's drag it back right there. You have your shoulder forming, your head forming. We see all this liquidity below us here, right? And we're thinking to ourselves, we're probably going to make a run for it, but we're not sure. So let's hit that play here. So there we got that break of structure. I let it go for too long, but change happens. You think it's going down. Let me take a short, right? However, we created a fair value gap up here. That is where I personally would have targeted for an entry in this circumstance based off of me seeing this potential shoulder, head, and shoulders. So I'm just finding confluence here, right? So let's play it out. There we go. There's what happened. We even got a break of structure signifying more downturn. Now we did make some fair value gaps on the way up. Doesn't mean we're going to have to get them, but we're going to see a price rise afterwards. That is where you're moving your stop losses. You would have gotten stomped out. I would have gotten stomped out right here. And then it's just patience and waiting for your next entry. And if I let that play out a little bit longer, you can see that the uptrend continued a little bit before the downtrend started again. That's where, again, you come in, you find confluence, you say to yourself, well, we licked this pretty strong top up here for Tesla, going all the way back, support resistance, look at orders, what have you. You know, the market's coming down, you change your frame of thinking to short, you look to enter into shorts. Price action strategy can work on any single time frame. Obviously, the larger the time frame, the longer you're going to be in those plays. Fair value gaps can be found on any time frame. Knowing, dissecting, and analyzing the market on every single time frame makes you a better trader, takes out any potential surprises out of the mix, and quite frankly opens up opportunities for you that you might not see on one time frame or another. You might see it elsewhere. Price action trading utilizes a lot of methods that you are probably using currently. For example, we trade structures. We trade market structure, support and resistances, channels, patterns, flags, shoulders, head and shoulders, cup and handles, just like anyone else. You need to be aware of where you are in those channels on all time frames. You need to know where your support and resistance is at on all time frames. You need to know that this trend line was carrying on all year, and there's a good chance that we were going to get a bounce way up, and we did. We broke out right on this trend line, right on this order block. Break of structure happened beforehand. You see your change of character there. We're blasting off to the moon. So you need to find confluence and be aware of what's happening on every single time frame. Do not get trapped in a 5-minute time frame, and then all of a sudden you get taken out from some pattern or some trend line on a 4-hour chart or a daily chart or a weekly chart. Pay attention to liquidity. As liquidity changes, it can be pulled and moved right below us, changing the entire market, dragging it up or down depending on the move with it. So liquidity and everything we've talked about in the previous videos is still very, very, very valid in this trading strategy. Looking at this chart, we had a solid green day, super bearish. We have short-term memory in the markets. You need to have a short-term memory in the markets. This is bearish. This is bullish. It can change from candle to candle. We got rejected, cleared out this liquidity up here, filled this fair value gap, and got rejected. Next candle tried to go up again. We failed it, and we started to come down. Good entry here. We created this fair value gap, licked into it. Now you're in your short position. Candles have a language. This is going to be the hardest part to understand. Let the candles speak to you and tell you their story. The story here was super bullish movement. Bear said, nope, that's not going to happen. This candle is saying, you know what, this liquidity grab is not going to happen. We cleared it out. Orders pushed us back. They tried it again. This next candle didn't work, got rejected, and we're coming down. So that's what happened after that big run up. Here's what happened today. It was a similar situation, right? You had a fair value gap get created, didn't get completely filled, but mostly filled back here. We licked up into it. We cleared this entire order block up here. Look at that wick to the top of that order block. Next candle up, it tried to make a run for it again, didn't get it, and we fell out. And then it was just a free-for-all all the way down as no bid support was there. You can see where we caught some legs in this order block here. So far, so good. I just saw some people today trying to catch knives, trying to catch falling knives, trying to say, oh, this must be the bottom. Let me take a long, and then get stomped out. It happened over and over and over again. If you miss an entry or a position, make sure you just wait. Big deal, you missed it. The price is going to settle and create a new range. That's where you start trading again. You don't try to catch these falling knives or these rockets blasting off the moon, because you're just going to fail. Maybe you get lucky. Maybe you get lucky every once in a while. It's going to happen. But more often than not, you're going to get absolutely destroyed and wrecked if you don't have the patience to wait for price action to settle. And it will, right? Huge dump. Price action settle became tradable again, right? Price action ran up. Your entries, again, were back here. Your entry is not in the middle. It's just not. Your entries were up here, not in the middle. Beware of FOMO. Don't do it. Have patience. The price will settle and become tradable again. You missed it. You missed your opportunity. You'll get another one. Because the only thing certain in Bitcoin is that the price is going to the right. There's always the next opportunity. Let's look at another one. Let's look at Amazon recently. So we had that change of structure here. We had a huge day of Amazon, running up. These two candles, especially this one, tell a story. They tell us that, you know what, this is probably resistance right here. We got that liquidity lick into it, got rejected. Tried to get up there again, got rejected. Made a run for it, got rejected, fell back down. Probably time for a little bit of a downturn. That's exactly what happened. So we created a fair value gap right here, but the change of structure happened here. maybe a lot of people would have went short here and would have gotten stomped out, right? So you wait for your entries. You just gotta wait. 99% of trading is waiting. A good entry would have been here off of this candle. Not only did we clear this order block, but we got up to the 50% mark on this fair value gap. That is a great entry right there. So if you see, this entry is actually above the change of structure when it happened. So you would have been on the winning side of this. Maybe you got stomped out here. Big deal. But we're starting to also form a bit of market structure here as well. All things to take into consideration, right? Bit of a double bottom happened right there. Price went up. That same line acting as resistance. Now we have some fair value gaps to target on the way down. So you have to let the charts speak to you. And this is why this is the hardest thing for newbies to understand. It's going to take years of mastery. Your eyes have to literally be trained to pick up on this stuff. The candles have a language. The charts literally talk to you. This is smart money concepts in a nutshell. Dumb money, no offense to anybody, tries to long in the middle of a falling knife. Tries to catch a falling knife. That is dumb money. It's not what smart money does. Smart money took their positions up here or at this top. That was what smart money did. Dumb money tried to catch this rocket blasting off the moon and time a top in a rocket that is already headed to outer space. If smart money didn't catch this wick because maybe they were at their daughter's recital or something like that, and they get home and they see, we're blasting off, they're going to sit and wait on the sidelines until they see a potential reversal. Then they're going to wait and look for their entry. Dumb money is going to see or look at the price of Bitcoin and see it's down 0.2% and just blindly enter into a short. Market's down, must go short. Or they're going to say to themselves, hey, I'm smarter than all these millionaires and billionaires out here, whales who are controlling the market. I know where this top or bottom is. They don't. Follow the smart money. Listen to what the candles are telling you. Don't fight the market. If we're down, we're down until we're not. If you missed it, you missed it, you wait. Same thing on the reverse. If we're up, we're up. Don't fight it. Don't fight the markets. You're going to get hurt. When you throw on the FIB retracement from this impulse candle, right, the logical level for a retest is this 0.618 to 0.65, which is 65% to 61.8% of the impulse move to the top. We did get a bounce off of it, but you can see we smashed right through it. So to try to catch this on the way up with this much pressure to the downside is insanity. The charts, the candlesticks, the patterns, all the indicators, price action, smart money concepts, this is a foreign language. If I told you right now you have a week to learn a non-native language to you, be it German, Italian, Spanish, you're going to have a tough time at it. You're not going to be fluent in that in a week. You're probably not going to be fluent at it for years, right? In high school, you take 4 years of your language or whatever. In college, you take the advanced courses or so on and so forth. You get the point I'm trying to make here. So it's going to be the same thing with learning the language of the charts. Now, in Discord, I have some of the information, some good study guides here with chart patterns. Really, when you become an expert, you need to learn the candlestick patterns, right? Hammer, inverted hammer, dragonfly doji, bullish spinning top. Now, I'm gonna be honest with you. These are cleaner on traditional stocks than they are on crypto. Crypto is more volatile. 100% it is. Anyone who tells you differently is lying to you. So when you take a look at crypto charts, the language is a little bit different. It's like the difference between Italian and Spanish, right? They're both Latin languages. They're both love languages. They have similar words. They sound similar, but they are a little bit different. You have to listen to what the candles are telling you, and it's going to take you a while to get that and understand that. You're going to lose at the beginning. 100%, you're going to lose money at the beginning. That's why you don't want to risk a lot. You don't want to risk high leverage. Stack your Satoshis, baby. Stack your Satoshis. If you like some projects, invest in them, buy their tokens. That's what you should do while you're learning. Grow your portfolio. Have a little play money to learn the language of the candles, the charts, the patterns. And just like in school, or when you take a language course, or even Duolingo, these language apps, you have to put in the work to reap the rewards. So in Discord, I do have some candlestick patterns, right? I do have some stuff. We have 11, 12 videos now. We're starting to kind of build and lay the foundation. I'm dipping my toes into price action concepts for you today. It's up to you now to look through some of this stuff we covered today, right? So let's take a look at it real quick, right? In the timestamps below, learn what smart money concepts is. Read on what the candles and the different chart patterns are. Don't FOMO, be patient. Candles, right? Market structure, support and resistance, liquidity, time frames. Learn break of structures, change of characters. You know, when you're bullish, be bullish. When we're bearish, be bearish. Learn about fair value gaps. Take a look at price action and or smart money, same thing. And lagging versus leading indicators. That's your homework. Like I said, Discord is a good spot. I got this class TA section, not to mention we're in here chatting about this stuff all day long. We're in here asking TA questions, answering. Every Sunday we get together in Discord and chat. Live chats where we answer questions, help each other out. But at the end of the day, I'm not going to give you much more information than this. Quick 20-minute video for you guys here. I am going to expand on price action concepts, smart money concepts. We just kind of scratched the surface of it today. I'm not going to make a 50-minute video. I could, but I'd probably lose most of you guys. We're dipping our toes in. We're giving you some things to think about, some things to look at. While there are indicators out there that do some of this work for you, they're not foolproof. They're not going to catch them all. They're not going to catch every pattern, every fair value gap. You can learn this stuff yourself. Lux Algo Price Action Concepts is a good indicator to help you start to learn to pick up on this stuff. It costs money though, just like with anything. You go to college, you got to pay for the courses, right? It's the same thing here. It's just a business cost. You got to look at it that way. But that's it, guys. I appreciate you. Do me a favor. Smash that thumbs up button. Like, comment, subscribe, turn on notifications. Hop in Discord, guys. Discord.gg/alpha Aere. Links down below. Give me a shot, and we will see you guys for the next video where I expand upon this further.